Macro hedge stocks. Had a few questions, and I think the easiest way to answer these is just via a quick video. So let's go. So everything is based in, all the data is based in a simple online spreadsheet, and you get access to this. So all you have to do is each day just come into this via your browser, and then the tabs are along the bottom. We have roughly the same metrics for all of the assets in each of the tabs. We'll run through it. Model portfolio we'll get to at the end. That's basically a way of tracking any ideas or any ways of using the data that we think that's good at that moment. We put it in there so at least we can track it fairly. ETFs, so these are the major ETFs that we think are worthwhile following, and then obviously we apply some models. We have volume, whether we're looking at see whether volume is higher or lower, whether we're running at high volume or low volume or just average versus 30 days. And we have trend, which is a composite model looking at multiple tools, not trying to reinvent the wheel, but just looking at multiple things to give you an idea of whether we're going up or down, and whether we're going up or down in a strong fashion. Obviously 50 being very strong up move, and then minus 50 being a very strong down move, and then 0 being neutral. We have an exhaustion tool, which is price based, and it's letting you know where we are. It's looking at the last 5 days of action and saying where are we within that 5 days essentially. Then we have an upper and a lower range. This is a slightly longer term idea, and it's a volatility score. So it's using volatilities to suggest where we are going to find support and resistance within a market, and then in the middle we have a range score. This is great because what you can do is then on the other pages you'll see you can filter by this range score, so you can immediately see. So let's take the QQQ, that we are near the lower end of its range, right? So you can filter by it, and you don't even have to worry about looking at the close versus the upper range or the lower range. You already know that we're near, we're very close to 58, and the lower range is 255.79, so we're very close to the lower end of the range, and you can just filter for that, which comes in handy later on. Sentiment rank. This is using option flow just to analyze sentiment. It's very basic and it's just normalized. Again, I'm not trying to reinvent the wheel. I'm just trying to get data in one place so you can analyze it and then make good decisions. Historical vol and implied vol. These are interesting because you want to see what's implied and what's being realized. Then you have the implied vol, the 30-day implied vol, that is, as a 1 year percentile rank. How does today's volatility rank versus the last 1 year's worth of data? To give you an idea whether we're rich or cheap. Then I have the implied volatility minus the historical volatility in terms of historical volatility, and that's a percentile rank as well. So that suggests that's telling you whether there's a premium or a discount to the implied volatility versus the historical volatility. Not my favorite metric, and I've gone into this many times, so if you've got a question about it, you need to message me. And then I've got historical volatility and price correlation. This is interesting because when you take option positions, you really want to have an estimate of what the volatility path is going to look like, and that can give you a really, really good idea. You see a strong negative, obviously it's correlation, so it oscillates between -1 and +1. So if you're seeing something near -1, you want to be thinking to yourself, how much long vega do you want on the way up? If it's if it's near +1, you want to be thinking, oh, maybe I want some long vega. Obviously, long, short vega, they come at a cost. One is, depend. You got to weigh it up a little bit. But anyway, let's not get into option spreads anyway in this. Robinhood 100. I update this weekly, in the sense that the tickers will change on a weekly basis. The data gets updated daily, and this is relatively simple. But again, this has got these in table format, so you can then come in here and sort. I'll just show you the sorting on this, and it's relatively similar the rest of the way through. So we say, okay, let's filter this greater than 0. So we now find everything that's bullish trend. Right, done. And then we say, okay, I want something that is not exhausted. So we go, okay, I want it less than, say, 10. So not exhausted. Right, and now I want a range score. I want it, below average. And then I'm going to sort this by sentiment. So obviously the div 0, that's telling you that there's no options, and if there's any of these there's these markers in the box, that just means that there's an error in the data, or there isn't enough data at that moment to compile that calculation. But yeah, that is what it is, right? So anyway, so we're sorting this now. So we see that TLRY is a very positive stock. It's at the low end of the range, and it's mildly trending up, but people are very bullish on this. And then we come down to Netflix, and we see that it's a weak bullish trend at the low end of its range, and people are very bearish on this stock. One column you'll know that's extra versus the last page we were on is this Piotrowski score. Now you can go look at Piotrowski and his work. It's a fundamental valuation score out of 9. And it just asks 9 different checks for 9 criteria. It's easily available on the internet, so I'm not going to go into it now. And I go through it in the guide in Macro Stocks. You can go through here, and so 9 being the highest and 0 being the lowest. So you could essentially, instead of looking at a sentiment rank, you could say, okay, well, let's find maybe a quality company and invest like this. What you need to remember though is if this company hasn't reported recently, this has potential to be a stale number. Yeah, so things could change. Things have changed very fast this year, so keep that in mind. And it doesn't mean that this is not a foolproof investing methodology. But I've shared the net returns of looking at investing in 9s, just investing an equal weighted portfolio in 9 stocks that have a Piotrowski score of 9, and I've shared that on a back test, monthly rebalancing, and it way outperforms the S&P. That's why it's being used for a metric in here. Other than that, it's really up to you how you use it. Value picks. Now these are Piotrowski 9s. Something that you need to remember is sometimes, for some reason, the sheet scrolls down and to the right, so you need to scroll left and up. Not sure why Excel does that, but it's not my thing. One thing I didn't mention is the next earnings date. I've put that in here so you can easily see when the next the estimated next earnings date is going to be. You need to double check. If you're going to take a position in the stock, you need to double check when their next earnings is. But for rough before the way you're building a position, this is not a bad way of looking at it. So these value picks are Piotrowski 9s. And then they have all the same metrics. They're just Piotrowski 9s. This gets updated weekly. It's going to obviously more likely to change during an earnings season. Growth picks. These need resetting, so let's clear these. This is something I was looking at earlier. We remove these. Clear filters. I see. Clear these. But as you can see, you can come through here and sort of filter through and find some stocks you're actually interested in. So we've got about 39 or 40 stocks I look for here with growth picks. These are growth stocks that are picked out of the S&P 500 and the NASDAQ 100. Why those and why not the Russell? Why not this? Right. So the main reason is because the options are more liquid in those the stocks in those two, the S&P and the NASDAQ. And obviously, because we want to get involved in those. When you start looking at smaller cap stocks, then you have to filter whether the stocks have options, and then if they do have options, they have really wide strikes, and you run into a lot of issues that just you can easily avoid. So anyway, so these are 39 or 40 stocks. It was 40 stocks, but Google came in twice, so it's now 39. So you come through here, same thing as I said before, you can filter it again, and I'll probably add a Piotrowski score in here as well, just to give us another interesting metric. This is an area where I just store any stocks that they don't really fit in anywhere, but I want to keep an eye on them. So and I am open. I'm not going to make changes on this every week. But if people want to send in their own tickers and they're just going to get plonked in here and they're not going to get changed, we can just leave them in there. That's fine. Factor. So this isn't all of the the factor styles, but these are the ones that I think that are most interesting. So there are here. So you are looking at a volatility, a value, dividend yield, growth, and momentum. These are sort of rough filters, and then stocks. It's a portfolio based on those factors that we've selected here, or the style, I should say. And obviously the same stuff is you have a trend, and then we have a 90-day Z-score, so you can sort of sort these that way. And then you can also see which, I've just charted the Z-score as well, just to give you an idea of what's moving one way or the other. As you saw into the back end of, or the start of July, I should say, back end of June, start of July, we started seeing value, dividend yield, and vol get crushed, while we were seeing momentum and growth get bid up. So these were at nearly negative 2 to 3 sigma, and these were at plus 2 sigma, and then we saw the rotation out. Very similar, we saw, so this is just a way of sort of seeing whether you're going to see, a way of normalizing it, and then to see whether you're seeing or likely going to see a rotation in and out of a style factor. Then we drill into sectors. This does need some work to it, but it is work in progress. I mean, all the same metrics, and the 11 major, or the 11 sectors, I should say, a lot in the S&P with their ETFs. When I say it needs work, I would like to try and create this chart in a better format so it is easier to read. I've tried to, but I want to make it easier on the eye. But for now, this is what it is. And it just sort of gives you an idea of what is trending where. As you can see, tech was very, very resilient into the June pullbacks that all the other sectors saw, and now tech is the one that's getting hit here. Let's jump back to the model portfolio. Obviously, this is our portfolio as of now. It needs updating for our new position today. If we scroll across, so you have everything here. So we have the daily equity, end of day equity. We have obviously day equity, daily change, cumulative return is a percentage of the starting equity, a drawdown from equity peak, and in percentage terms, and then obviously drawdown from equity peak in dollars. Reasonably easy here. So I have the strategy link, and which is a blog post most of the time if these were published publicly. So I shared the tweet from where they're from, and then very basic. Started with $25,000, and then just follow it along. And I keep track of this number here, total premium paid, because this is our maximum. This is the maximum we could ever lose. Now, some people might say, "Oh, wow, that's nearly $3,000 on 26,000. That sounds a lot." Well, people go and they'll invest nearly all of their 25,000 in a few shares or a few stocks, and I mean, you have essentially said that they could go to zero. And so if you've invested your whole portfolio in some stocks, you really have, you've invested it all, and it could all go to zero very easily. The only thing that could go to zero here is this total premium paid, which is about, it's just over 10%, right? So, I mean, it's aggressive, but it is what it is. You're not going to get good returns from a $25,000 account that are going to justify even doing it otherwise. But anyway, this is just a way of recording what. If I say, oh, I like this spread here, and I like this data here, it's a way of you looking at it going, okay, well, what was the return of that? And I think it's the only fair way of doing it. So going through, obviously we have Qualcomm, a bond position, a long sterling position, long Visa, and long Himax. And there's another trade to go in here at the end of the day. Obviously, our P&L is going to be slightly lower here because we've seen a little bit of a pullback in the overall equity markets. And then down on the bottom left here, we have our closed positions. You'll see Microsoft did well. Silver did very well, but then exited slightly early. But I mean, it is what it is. And then we had this CPRX, which we exited for basically a scratch after giving it a lot of time. Now, the beauty of the options here is you get a lot of leverage for very, very little downside. You know your max loss. You're never going to wake up tomorrow, even if you know, for some reason you've missed the earnings and you get an Intel and suddenly the stock's down 20% the next day or 17% or whatever it was. Yeah, limited risk strategy. You go, oh, okay, right, yeah, this sucks, but at least I've only lost my the premium paid, and I can get, wipe my mouth, move on. Hopefully that sort of explains in the shortest format what the Macro Hedge Stocks is about. And if it's something that interests you, great, sign up. If it isn't, that's also great. Best of luck with your trading. And any questions, please let me know. Cheers.